Welcome everyone. My name is Sam May with Cabinet Grow. I'm here today with CFN at the 2015 Los Angeles Cannabis World Congress. Today I'm here with Scott Jordan from Dynamic Alternative Finance, and I'm really interested, Scott, to hear about what you had to say, because there are a lot of cannabis companies looking for funding right now. Tell our audience how you're helping cannabis businesses right now.
Well, first of all, thank you very much. I've always admired what CFN has done for the industry. I think it's tremendous. And yesterday I spoke about the role of debt-based financing in a marijuana company's growth. And what I talked about was the value of borrowing money rather than giving up equity. And the nice part about borrowing money is you're not taking on a partner, you're not having to give up a board seat, you're not having to give up control. What you do is you simply make a payment and you pay an interest rate. And a friend of mine said, so really when you take on debt, it's sort of like dating, and when you take on equity, it's sort of like a marriage.
Correct.
And I said yes, and sometimes those marriages don't work out as well as you'd like, and so what we do is we provide growth capital for companies that are in business today that are looking to expand and grow larger. And we do that by financing equipment, financing working capital, as well as financing real estate.
Interesting, real estate. So that's new. You know, you and I have spoken before. I like the fact that you're very interested in participating in companies that are developed, that are growing, that have a foundation that they're building on top of. Tell me more about the real estate side. How does that tie into your model?
Sure. So glad that you asked that. There's a couple of different ways that we do it. For the marijuana business owner that has, let's say, bought his building for cash or wants to buy it with a traditional mortgage, we have private sources of mortgage money that are single-digit rates, long-term, fixed-rate mortgages that are also assumable. So what we can do is we can give a marijuana business owner that's well-qualified 8.5% to 9% money.
That's incredible.
They can do it on a fixed rate for 10 to 20 years. The payment, they can set it up in a separate company so that they can divide up some of the earnings and also have the assets held separately. And in effect, what they do is they have their customers help pay down their mortgage and build equity through that. And the advantage of that is it helps them create real wealth, because the best way to create wealth is to own an asset that is solid like real estate and look to pay that mortgage down and own it free and clear, or look at owning that mortgage and look at having that mortgage be your retirement plan or as part of your assets. It also helps them from the aspect of providing a landlord that they know,
Right.
love, and trust. And I've heard just nightmare stories about what a landlord can do when they're not friendly in terms of wreaking havoc with a business. So
100%.
I'm a big proponent of owning your own real estate whenever possible, and this has been something that's happened in the last 3 to 6 months where we've had private money that will come in and provide long-term fixed rate mortgages. For the business owner that doesn't have the down payment, let's say, to do that, we also are instituting a program where we will have a friendly investor come in, buy a building, lease it to the marijuana business owner, provide them with an option to purchase in the future so that the tenant improvements that they make, which are almost always $500,000 to $1.5 million, sometimes even more, are not at risk or wasted. And they can go ahead and look to buy that building after they've been in that building for 3 to 5 years. They can look to purchase it with an option to buy from that friendly investor.
So in simple terms, like a rent to own.
Correct.
That's amazing. I mean, so you're really focused on the long-term health of the businesses that you support. Can you give us any examples of some recent success stories, anybody that you've worked with?
Sure. We are working right now with a collective up in San Francisco that was looking to expand their grow from 10,000 square feet to 25,000 square feet. They needed equipment financing. They needed some working capital to build out the tenant improvements. we were able to arrange a $430,000 lease for them over a 3-year period of time. And what they were able to do is they were able to reduce the wholesale cost to them from buying wholesale, control their own product, and provide really good medicine to their patients up in San Francisco.
That's great. That's
and
fantastic.
So that was just one example. We've also helped a large chain in Colorado that wants to remain nameless go from 4 stores to 12 stores. They got a license for a number of stores in Aurora and Adams County, which is, I live out in Colorado. Those are surrounding the Denver County, and we were able to help them, get them some working capital to be able to expand out, build out the stores that they need, and be able to expand their vision to be able to get larger. And you know what I'm finding these days is most of the business owners realize that the period of time we're in right now, it's a land grab. They really want to go and get themselves established in the best possible locations, in the best possible areas, and show that they've got traffic and they've also controlled those retail spaces. By doing this and expanding very quickly, they feel that they will be in the front of the line when big tobacco, big pharma, big somebody else comes along and wants to take advantage of those retail locations in order to expand and put their footprint on the market and hopefully sell out for a large multiple.
Sure. So, you know, in a market that's evolving as quickly as cannabis is, I mean, having a capital partner like yourself is so critical to so many businesses in this space. I mean, I'm really happy to hear that you're not only active in evaluating these opportunities, but you're executing and deploying the funds. I mean, that's incredible. And to hear you say 8.5% to 9% for a real estate transaction, I mean, that's ties to some of my background. Without, you know, giving the secret sauce, how are you able to offer rates that are so low for an industry that is traditionally looked at with a great deal of risk?
Sure, it's a great question. The reason is we've got private money behind us. What happens is that when you're not having to rely on bank funding, and this particular investor wants to have long-term stable money, what we do is we lend at a lower loan to value, go to 60, perhaps 65% loan to value, and we look for a high quality borrower. So it's what I call semi-hard money, in that it's higher than bank but lower than hard money. And so it's something that when you have good credit and a good financial position, that it's fairly safe money being that low loan to value. And when it's a 10-year mortgage, you pay the mortgage down so much more quickly, and you gain equity in the property. So each month that loan balance comes down,
and the company gets healthier.
And correct. And the other part was we had a savvy private investor that said, you know, if these guys come into my building, they spend $500,000 to upgrade the power, they spend another $500,000 in tenant improvements, they're not going anyplace.
Right.
And I don't think marijuana is going to be eliminated or struck from each of the states that it's in, so it's only going to increase. So even if that tenant for some reason building should not be successful, he's still got a fully built out building that he can then bring another tenant in to be able to complete the lease or sell to.
That's fantastic. So Scott, what I think our audience really wants to know is, how do they get in touch with you? There are a number of cannabis businesses looking for capital, looking for partners like you. How does that work? How do they reach you?
Very easy. My office number is 303-754-2050. You can also reach me at Jordan, Jordan, at dynaltfinance.com, and it's DYNALT finance.com. So it's short for dynamic-alternative-finance.com.
Excellent.
Would love to talk to any business owners that do need my help. I'm a real advocate for the business. I like to help the underdog. It's a very difficult playing field when you don't have the traditional help that businesses have. You don't have SBA loans, you don't have USDA loans, you can't even go in to get help from the normal business avenues that a startup business or any kind of business would have because you're associated with cannabis. And I think that it's a shame that a business that's state legal cannot get the resources they need to grow. So I want to help do that, and I appreciate you having me here on your show today.
Thank you very much, Scott. It's incredible when you look at the program that you have, and to your credit, when you mentioned earlier that equity being the most expensive asset for a company to leverage, to have a partner like you, it's an honor to have you on. And please keep up the good work in the space. Again, this is Scott Jordan from Dynamic Alternative Finance. Thank you very much, Scott. I appreciate your time.
Hey, thank you, Sam. Appreciate it.
Enjoy the expo.
All right, very good.